It's January, so that means it is tax season again. And what I want to do in this video is give you 6 tax tips that you can use in 2024 and in every tax season going forward. So that is 6 tax tips that you can use each tax season. Tip number 1, identify whether you really need to hire a tax professional. Let's talk about a specific scenario. You have a job, you own a home, you give to your church or your favorite charity, and that's really pretty much all you do all year. In that scenario, you probably don't need a tax professional. You can probably just use TurboTax. And the reason being is your payroll department is going to calculate your estimated taxes for each paycheck. And if you filled out your W-4 correctly, you shouldn't owe anything at the end of the year. And if you do, it should be very little. All right, when is a scenario when you need to hire a tax professional? If you start trading cryptocurrency, or if you sell your house, or if you buy a new house and then you rent out your old house, or you start a business. Those are scenarios when you need to seek professional tax advice. But if you have a job, you own a home, you give to charity, you probably don't really need a tax professional. You don't need any tax advice. Well, let's take that same scenario. You own a home, you have your job, that's all you do, but you still keep owing taxes every year. Well, that lets us to tip number 2, and that is you need to calculate and determine what is your federal withholdings for each pay period. Okay, how do you calculate your federal withholdings each pay period? It's really easy to do. You take your last pay stub, and on that last pay stub, what you're going to see is an item that's either listed as FIT or Fed, federal, Fed with, all of those abbreviations. It's usually the amount that is above Social Security and Medicare or FICA. That's your federal withholding. Well, you want to take that year-to-date number and you want to divide it by your year-to-date gross pay. When you get that calculation, that percentage on the low end needs to be around probably 15%. On the high end, 25%. If you're making 6 figures or more, you may need to go a little higher than the 25%. It all depends. But if you filled out your W-4 correctly, it should fall within that range, 15 to 25%. So that is the way you calculate your federal withholdings. Well, what if it's not in that 15 to 25%? Then what you need to do is you have to go back and you need to change your W-4. And I will have another video that shows you how to complete your W-4 to make sure you fall within that 15 to 25%. Okay, so you have a regular job and you don't need, and your withholding is correct, so you don't really need a tax professional. Okay, well, who does need to hire a tax professional? Well, I alluded to this before, or I mentioned it before. If you start a business, if you have rental real estate, if you have cryptocurrency, if you have what are called RSUs, restricted units, if you're getting paid compensation with stock, that is a time to hire a tax professional. But when should you hire the tax professional? So that gets us to tip number 3. You hire a tax professional before the end of the year. So I see this happen every year. A new client will come in and they give me all of their tax information. They're like, here you go, prepare my tax return. Well, by the way, you're a CPA, you're certified, you have all this education. Hey, I want to make sure I save as much taxes as I possibly can. Do your work. The problem is, after December, there's not a whole lot we can do. Why? Because the time we needed to do any of these strategies and this CPA magic was throughout the tax year. Come tax time, there's not really much we can do. Because honestly, a tax return really is just a reconciliation of all the things that have happened throughout the tax year. That's what the tax return is. So we're going to take the data, then we can do to change it. We're going to put it in the software. Now, there may be some opportunities that exist, but they're going to be significantly smaller than if you would have talked to a tax professional well before the end of the year. Now is the time to start booking consultations with tax professionals about the 2025 tax return. Take about an hour or two, pay for an hour or two of a CPA's time. When should you do that? When you start a business, or before you start a business, before you buy rental property or short-term rentals, Airbnbs, before you start buying crypto. You want to take about an hour or two, sit down with a competent tax professional and get some basic tax advice, things to look out for, some pitfalls that you see other people have done so that you can avoid those. So you want to hire a tax professional before the end of the year. So tip number 2, you need to keep good books and records. Now, you've got your business, you're moving along, things seem to be going great. And then what ends up happening at the end of the year, you take all these receipts and spreadsheets and all these different documents, if you have them. You've commingled your personal funds with your business funds. You give them to the CPA and go, all right, work your magic. Here's the problem with that. Your tax savings is only as good as the information that you give us. You got to keep good books and you got to keep good records, because that is the information we're going to use to help you reduce your taxes. Now, there is a more important reason as to why you need to keep really good books. And here it is. We're going to go directly to the IRS website and we're going to read it so you can see exactly what the IRS says and what the law says related to your documentation, your bookkeeping, your records. And irs.gov, burden of proof. And it says, the burden of proof to substantiate everything in your tax return, it's on you. It's not on your CPA. It's not on the IRS. The IRS doesn't have to prove their position. You have to prove it first. So when the IRS comes knocking, they're going to say, prove to us that this is legitimate. We don't agree with what you have on your tax return. The burden is on you to prove that the information is correct. It follows the law, and you can support whatever your position is. What our job is as a CPA is to take the information you give us, the story that has happened, the history of what has happened in your company and in your rental property, and then use that information to interpret the law to the best of your advantage. And sometimes the best advantage is not you saving money on taxes. Sometimes the best advantage is for you to take a position that may hurt you in the short term, but will help you in the long term. So it is your responsibility to keep up with your books and to have solid books. Where if you are a business owner or you own rental property, what do you think the IRS is going to audit? They're going to audit your books. They're going to audit the transactions that you created running that business, owning that rental property, renting those units out. So that is important. So having haphazard records or trying to go cheap on your books or thinking, the CPA is going to do it at the end of the year, I'll be fine. That's the wrong attitude to have. You need to keep good books and records. You need to keep them all year long. And there's 2 words I want you to remember, and I know I'm going to say them over and over again all year long. Contemporaneous documentation. That is your friend. What is contemporaneous documentation? Well, let's look up the legal definition of contemporaneous documentation. And that legal definition says, let's put it in layman terms, do it when it happens. What does that mean, do it when it happens? Contemporaneous documentation is not creating a mileage log in February of 2025 for the 2024 tax season. Contemporaneous documentation is not creating a real estate professional log or a material participation log in March before you give your tax documents to your CPA. That's not contemporaneous documentation. And what you see when you read tax court cases is a lot of people lose because their evidence that they give, like their logs, is not believable. It's not realistic, or it doesn't appear to be contemporaneous. So keep good books. You want to do it in the moment, as best you can. That's going to help you and save you each tax season. All right, what is another tip? Don't assume that it is the tax professional's job to do all the work. Look, as accountants, we take the information you give us, we interpret the law, we prepare your return, we give you good advice. We don't know what you do every year. Even if we're preparing your books, we still got to get the information of you on what you bought at Best Buy. What did you buy at Amazon? How do we know it was an actual business expense? What did you buy at Walmart? You can buy anything from those places. So how do we substantiate that those were legitimate business expenses? We got to get the information from you. You are the one who's going to tell us what happened. And from there, we'll be able to prepare a tax return, create tax strategies, and minimize the tax burden that you may owe. Final tax tip, and I see this a lot. Don't bury your head in the sand when you start seeing big tax bills and getting letters from the IRS. And I see this a lot. And I understand why this happens. You get this tax bill, you freak out, you don't know what to do, and you ignore it, or you throw it away, or you just think it's going to take care of itself, or you just don't worry about it, or you think next year I'm going to catch up, so I'm not going to worry about it now. That's the absolute wrong thing to do. The moment you get a notice from the IRS, you need to reach out to a tax professional or you need to reach out to the IRS. And why is that? If you read the letters, what you will see is there are deadlines on that tax return. And the longer you take to do things, sometimes the harder you make for even the IRS to help you out and to mitigate what you may owe. And here's the thing, as soon as you get a notice from the IRS and you reach out to a tax professional, we know the law and we're able in some scenarios to reduce how much you owe. Maybe you have a legitimate excuse or reason as to why you didn't file. Maybe there was a deadline extended that you weren't aware of. But the longer you take to address the issue, the harder you make it for us as tax professionals to help you mitigate whatever it is you owe. So don't bury your head in the sand. As soon as you get something, you want to reach out to either the IRS or you want to reach out to a tax professional. And I talk to the IRS practically every day. So I understand how frustrating it can be waiting online for hours and hours, waiting online for 3 or 4 hours, and then the call drops. Then you finally get through and you talk to someone and that person doesn't even know if they can help you. And sometimes you don't even know if they understand the tax law. It's very frustrating and it's all part of the deal. But if you ever get a letter and you don't know what to do, reach out to a tax professional. Don't bury your head in the sand. Now I'm going to leave you with this last story of a situation that happened and as to why you need to just go ahead and take care of it. So I had a client call me, a prospective client call me, and she was really concerned because she hadn't filed for several years, and she finally got to a place where she could file. Looked at her situation, got all of her information, and guess what? She thought she was going to owe. She actually didn't. She got refunds, and not only that, because of her specific situation, the IRS actually owed her interest for her refund. So it's not always a bad thing when you get a letter or when you can't file for some reason. Again, we need to get the information from you. You need to address it as soon as you get information from the IRS. When you feel like you're running into trouble, you need to call the IRS or you need to call a tax professional. So there are these 6 tax tips that will help you not only for this tax season, but in future tax seasons. See you on the next video.